Hey everyone, I'm Jeanette Birnbach. Welcome back for lesson 3 of our crash course on real estate syndication. We're starting to get into the really interesting stuff now. So in this lesson, we'll look at how passive investors get paid. My company with my partner Sanjay, Blue Ring Investors, we are very strictly SEC compliant, and the SEC tells us that we can't discuss a specific opportunity with people until we have a pre-existing relationship with them. And there's a quick way to establish that. You can visit our website, blueringinvestors.com/invest with us. You're also welcome to schedule a call where we can discuss your real estate investment history or goals and get to know you a little bit before we could present specific opportunities that we're working on. But what we can do in this lesson is look at how investors are paid in general. There's 3 ways for how investors get paid, and these are cash flow distributions, cash out refinance, and the sale of the property. And we're going to look at all 3 of these. These are some of the exciting reasons why people get into real estate in the first place. When your multifamily investment property, if you've invested in a multifamily syndication and it earns a profit, you do too. Cash flow distributions are earned from rental income, and they're paid for the duration of the syndication project. It's typically between 6 and 9% annually, and it is paid to the limited partner investors before any money gets paid to the general partners. So what that means is the general partners pay their investors before they pay themselves. And of course, that's motivating to the general partners too, to make the project be as successful as it can possibly be. The start of the distributions depends on how long it takes to stabilize the property. The heavier the value add, the longer it takes to see distributions. It's usually about 6 to 12 months to stabilize a heavy value add property. So in other words, your syndicator is going to need a little bit of time to make basic improvements and raise occupancy and rents before the cash flow distributions can start. Information, though, about the timing and how these distributions are expected to work, all of that's covered in the business plan that you get to review before deciding to invest in a syndication. Distributions are calculated by taking the gross income and subtracting operating expenses, capital reserve, mortgage payments, and asset management fees. So to increase the cash returns, or the cash that's left over after paying for those bills, it's vital to have a GP who understands the best way to increase the net operating income. And they do this by increasing income, decreasing expenses, or some combination of the two, ideally. The frequency varies by project and operator, but most passive investors get their distribution checks quarterly. Now, there are 2 main ways to increase the value of a multifamily property, and those are forced appreciation or market appreciation. A well-executed business plan typically includes renovations and upgrades to the property with amenities like pools or dog parks. And they also improve the units with things like new appliances and floors. And these improvements make the units more attractive. They make the whole building more attractive, and they command higher rents. Another forced appreciation strategy is to reduce costs. So you might do this by hiring a more effective property manager or finding ways to decrease utilities with green initiatives that are meant to save money and be good for the environment too. Investment properties are chosen for their potential for market appreciation over time as a result of the strong local economy, positive population growth, favorable supply and demand characteristics, resulting in increased demand for rental apartments in that area. But strongly underwritten deals don't rely on this type of appreciation for the deal to be successful. But we certainly look for properties where this is very, very likely. Another related term that's good to know is the term cash on cash return. You're going to see this one over and over, and here's how it's calculated. It's really simple. Let's say that you made a passive investment of $50,000 and that you earned $4,000 in annual cash flow distribution from your investment. The cash on cash return is calculated by taking that annual pre-tax cash flow and dividing it by the total cash invested. So we would divide the $4,000 annual cash flow distribution by the $50,000 initial investment, and that would let us know that we're getting an 8% return on our money, or an 8% cash on cash return. So over the time of the investment, you'd receive an average of an 8% return on your investment. Besides the cash on cash return, passive investors also get another and much bigger payday in the case of a cash out refinance. Now, depending on the value add and how quick the general partners are able to improve that net operating income, they can refinance the property at a higher valuation, usually right around year 3. This gives the operator the ability to pay off the loan and return a significant amount of the principal back to the investors. And they still hold the property to continue bringing in cash flow. So this is good for the investors because it gives them the ability to reinvest that money in another deal while they still hold equity in the original investment. So the investor continues to get cash flow distribution checks based on their initial investment, even though their principal was returned to them. So in a way, you can have it invested in 2 places at the same time. A really exciting aspect of syndication. And then there's the sale of the property. Investors get paid when the property is sold. The syndicator repays the loan first and then returns investors' principal investment plus profits from the sale split based on equity. So GPs continually follow the market and determine the best time to sell a property, and it's typically right around the 5-year mark. So in summary then, the ways that investors get paid are regular cash flow distributions, usually quarterly, a return of some or all of the principal at the cash out refinance while still retaining equity shares, and then finally a piece of the sale of the property based on equity. All really amazing aspects of syndication. Now, I hope that we've answered a lot of your questions with these lessons, but if you have more, there's one more lesson coming up where we'll look at tax strategies, which is probably the most exciting piece of this. But you can reach out to us at any time. You can see our website at www.blueringinvestors.com. You can reach us by phone, or you can go on the website and schedule a call for when you have a good time to do it. And we'd love to hear from you. Otherwise, we'll see you at lesson 4.